Hello there. Welcome to lecture 13 of the model series. As you can see, this lecture is completely different than what you're used to of the model series. The reason why I've decided to put myself out here in front of a camera is due to the following. During this lecture, we will discuss the topic of psychology. Psychology is one of the most important topics to discuss when it comes to trading, and I feel like I can give you the best psychological advice whilst speaking in front of you. I have of course done my face reveal on the Words of Wisdom podcast recently in the same studio, so the background is exactly the same, and that's why I decided to come out here and just record this lecture for you this way. What I'm going to do during this lecture is I'm going to wake your ass up. I know it's very important to discuss what I'm about to discuss, since I knew that the technical approach that one possesses doesn't necessarily lead to profitability. You can have the best technical approach in the world, but if you do not understand how to manage yourself, how to control yourself, you will never reach the success that you desire. And that's why I'm in front of you right now to discuss psychology with you. I'm going to use explicit words to wake you up, meaning I might curse here and there, but that is just my emotion coming out because I want to help you as best as I can. So let us begin with today's lecture. This lecture is going to be structured in a way where we'll discuss a variety of psychological issues that one might experience. However, what's very important to note is the fact that even though I'm going to discuss these psychology issues with you, it's important to note that I will not be able to discuss everything during this one lecture. Alright, so the first topic that we will discuss is the following. The first topic is how we can learn to control ourselves. First of all, we need to learn how to be able to say, okay, this is enough. I know what I'm looking for, I know what I'm doing within the markets, I know my model, but how can I limit myself when it comes to the amount of trades that I'm allowed to take? The majority of people, they get an edge, they get a good understanding of algorithmic price delivery, they get to this level where they can see and explain every single market move, but they try to do it. They try to do it every single time. They try to push it. And by trying to push it, what you do is you make mistakes. Because we as humans are limited in how much we can control ourselves whilst we're behind the markets. The majority of people think that simply because they have an edge, that they need to push the edge. That they need to go out there and try to do as many trades as possible. But the opposite is true. What makes you consistently profitable is actually doing less. But by the things that you do, they need to be highly probable. Because if you only execute when everything lines up, when simply everything tells you that the market is going to do something, that right there is when you have a high probability trade. And that might not be a high probability trade every single day or every single few days. Some weeks there might only be like 2 or 3 high probability trades, but the majority of people will then still try to push it in those low probability days. And that right there is the first thing that we're going to do. By saying, okay, we're only going to focus on the highest probability days, we're already removing a lot of the potential mistakes that one might experience. So if we focus on simply the days that are the highest probable to us, we can then say, okay, if we have these high probable days established and defined, the next thing we will look for on those days is the following. We will look for all of the technical signs that confirm to us that a setup is in play and that a trade is going to be justified. But here comes the next topic then. If we understand what our edge is, what our model is, the majority of people will try to do things impulsively. They will try to go out there and they will try to just trade for the sake of trading. This is mainly because they're trying to make money from trading. They're trying to go out there and make a shit ton of money from trading because they need to make money. It might be that they're in debt. It might be that they need to pay their bills every single month. It might need to be because they have some vacation that they need to pay for. But what's very important to note here is that if you're going into the markets with this mindset of I need to make money, I need to go out there and earn money from the markets, you will do stuff impulsively because you're emotionally attached to the outcome of every trade. You're constantly thinking, I need to go out here and I need to make money. So what do? Instead of following all the rules of your protocol, all the rules that I'm teaching you within the model series, you will try to just simply push it because you have a feeling that something might occur. You're experiencing FOMO. You don't want to miss out on moves. You are experiencing a sense of rush because you want to make that money. And the first thing you need to do then is detach yourself from that. You need to detach yourself from the emotional stimuli that you might be experiencing in order to get into the markets in the first place. What you need to understand is that the market doesn't give an F about you. It doesn't give an F about your personal life. It doesn't give an F about your desires. It really doesn't care. The only thing that the market does is what it's programmed to do. Meaning at the right time, specific things in price will occur. If you accept that statement right there, and you're able to truly believe in that, and you are able to see it consistently, seeing the market deliver at specific times, each day, each week, all you need to do then is say, okay, if I know that the market should deliver at that time in this way, you need to go out there and say, okay, I'm going to wait for that time of day and I'm going to look for those very specific price patterns. And if they're there, there's a trade. The market is likely to move from point A to point B. But if those signs are not present, what do you do then? You walk away. You don't try and sit there and try to do more. You don't try and sit there and try to show off to the world. You don't try to go out there and simply say, you know what, I have this feeling that something might occur, so I'm just going to push it. I need to make, let's say, a few grand from this trade. I need to make a few grand today, so I'm just going to push it. Even though my model is not present at all, I see a gap get created, a fair value gap, and I think it's going to get respected and then it's going to offer me a nice run. If you're thinking that way, you need to stop right away and you need to walk away. And the moment that you realize that you're experiencing those thoughts in your mind, you need to simply say, okay, I am right now emotionally connected and attached to the outcome of this trading day or this trading session. And when you realize that right there, the best thing you can do is simply walk away. Where the majority of people would try and go out there and try to still push it and take unrequired losses, you are going to say, no, not me. I'm better than this. I have ultimate self-control over myself. So if we understand that that is how we can control ourselves behind the charts, when we have established our edge, we can do so. One thing that's very important to note is, as you have been hearing me say already, you need to know what your edge is. You need to know your model. If your model is not even present yet or understood by yourself, why are you even watching this lecture? If you do not understand the technical side of trading and you do not understand what you need to look for within time and price, why are you even worried about psychology? Psychology is not your issue then. Your issue is then that you do not have a technical edge yet. And once you have the technical edge, come here to this lecture. This lecture will not disappear. You do not have to watch this right now. But if you do have your edge, please continue watching because we're going to dive deep into all of the psychological issues that you might be experiencing right now when it comes to your trading. If we have our model defined, if we know what we're looking for, it can be very hard to stick to that. And the reason why it can be very hard to stick to that is simply due to the fact that we as humans are emotional beings. We as humans have desires, we have emotional stimuli that can cause us to behave in a certain way. And when we know that of ourselves, we need to find ways to deal with that. Where the majority of people think that trading is simply about the markets, about the charts, it's actually not. This battle is won in your mind. You can have the best technical edge in the world. You can have the best model out there. If you do not know how to control yourself, you will not be consistently profitable because you're going to do things that you're not supposed to do. And I know that some of you are currently at this stage because I've been receiving support messages asking me about how to deal with that. And that's why I've decided as well to come out here with a camera on my face and just speak to you. This is a very personal approach. It is you and me inside of a room. No distractions around you. We're simply going to discuss psychology. And if we understand that we have a profitable edge, if we understand that we have a model in place, we need to build up the discipline to stick to that model, no matter what. And the way that we do that is through the following. We build up discipline beyond the charts. We build up a disciplined lifestyle. We eat healthy. We're surrounded by good people. We train hard. We have experiences of fun, meaning we're not simply only focused about the charts. Instead, we're consistently following these rules to make us the best human beings possible, and in which we're experiencing the best life possible. And as a natural result of that, we're going to feel better, which will allow us to stay calm and patient when we're behind the charts, making it easier for us to simply follow the model, follow the edge, and do what we're supposed to do. And if we're consistently doing what we're supposed to do, what do you think the logical result of that will be? You already know the answer. What you think to be the end destination right now for you, it might be 10K a month, it might be 50K a month, it might be 100K a month, it might be a million a month. It's not high enough, because you can do whatever you set your mind to. And if you're able to follow the rules that I will provide to you right now, you will be able to elevate your level of understanding, time and price. And then the only thing that separates you from making serious money is simply the capital that's backing you. The capital that's behind you, that allows you to trade in the first place. So if we have established that we are disciplined behind the charts, another thing that we need to understand is that we can experience a sense of fear. When I was coming up and I began seeing large amounts of money in my P&L float, meaning open P&L, I became a bit fearful because, of course, I'm young. I wasn't used to seeing big numbers. I wasn't used to seeing those big numbers fluctuate. So when I saw those numbers fluctuate, and we're speaking about thousands of dollars right here, when I saw those numbers fluctuate, for me it was a big struggle to learn how to deal with that. Because how could you potentially risk, let's say, 1 or 2K if the average monthly salary in your family is like 4 to 5K? It's of course a big amount of money to risk then. So to be then fearful about executing is something I personally had to go through. And to then basically say to myself, okay, I know my model now. I know what I'm looking for in the charts. I know how price delivers. I know when it's allowed to deliver. All I need to do is press on buy or sell. I don't care about how much money is attached to it. I don't care about how much money is going to be made from that move from point A to B. All I know is the following. The risk that I'm taking is a risk amount that I'm comfortable with taking. And if that is 1K, if that's 2K, if that's 4K, if that's 10K, doesn't matter. It's up to personal preference, and you need to look at risk management through that lens. The reason why you're fearful right now of opening positions is simply due to the fact that you're over leveraging. You're risking too much money relative to what you're comfortable with risking. So that's why I'm telling you, decrease your amount of risk, focus on following the protocol, focus on doing the right thing, and then you will notice that you will decrease the amount of fear that you experience when putting on new positions. But then another psychological issue that can come up is the following. When you have experienced what it's like to basically fear risking equity, you will then fear losing, because if you open up a position, the first thing you're thinking is, what if it hits my stop loss? Every single move against your position will feel like the end of the world. It will feel like you're being attacked. It will feel like you're being stabbed. But the opposite is true. And the reason why the opposite is true is because if you know how the markets move based on time and price, all you need to say to yourself is the following. Every single leg against my position is simply the engineering of new liquidity that can be attacked at a later point in time. As long as very specific price levels are not being displaced below or above, meaning invalidation levels do not get reached, You know that price will deliver from point A where you entered to point B. And every single retracement leg is a potential opportunity to get in sync and maybe even pyramid if you're comfortable with pyramiding already. You should actually begin to smile when you're seeing the market move against your position, especially once it has already shown a willingness to expand into your anticipated direction. And the reason why that's the case is due to the following. If you understand that the market has to retrace before it's allowed to expand, it has to consolidate before it's allowed to expand, you can basically say, okay, if I understand that someone is right now going against my position. And that someone is going to be wrong because I know what's going to happen. They don't. And it's a very weird feeling that you have to basically gouge for the first time, that you have to experience. And once you have experienced that feeling once you get so comfortable in your own edge, in your own model, and you get so confident in it, you will sound egotistical. If you would speak about your model, if you would speak about your trading to others, they would think, man, this guy is such an egotistical maniac. He's just focused on himself and he doesn't care about the rest of the world. And that's exactly the mindset you need to have when you're behind the charts. Because you're either the one that eats or you're the one that gets eaten. You need to be the one that hunts the liquidity. You need to be the one that attacks the weakest form of trader out there. And that's exactly how we're viewing the markets. We know where the masters are going wrong, and we do the opposite. We benefit from their mistakes. And it might be hard to accept that at first, but if you're able to understand that right there, you will be able to deal with a lot of the fears that you might experience when getting into trading, especially live trading. Now, something that comes as a natural result of becoming good at this is the desire to do more. It's the desire to go out there and show off. It's the desire to do more than what you should do in the first place. And it's something you need to experience. Everyone that is right now at a stage where they're taking fantastical trades consistently has been through that. Because they know that in order to get to a level of ultimate self-control, of ultimate consistently being able to go out there and trade profitably, getting in and out, and then stopping, they first had to experience what it was like to do the opposite. Meaning, getting out there, taking a trade, getting a win, and then taking another trade. Because the market is signaling to them, based on their model, that another trade is in. But then you need to realize that you can do that all day. Every single, let's say 90 minutes there's a setup. Or even every 30 minutes there's a setup. Does that mean that you are able to trade every single 30 minutes? You already know the answer. Yes, but should you? Of course not. Because after one trade you have probably already experienced what it's like to get out of a position. Whether it be profitable or whether it be a losing trade. You have experienced that if you got out of that position and it had been running for a long time, that you probably felt a bit tired, a bit drained. If you then decide to still look at the markets after that, what do you think the natural outcome of that is going to be? You're going to perform less than when you would have just stopped, walked away, and came back when you were refreshed. The next psychological issue that I want to discuss with you is the topic of impulsiveness. Impulsiveness is something that a lot of traders experience when they come out here. And the reason why a lot of traders experience this is due to the fact that they're so emotionally attached to the outcome of every single trade. They're not trading because they're trying to profit from the move from point A to B. They're trading because they want to make money. And as weird as it may seem, you need to completely change that mindset if you are experiencing that. Where the majority of people are going out there to try and make an X amount of money in order to pay for their bills, in order to pay for their rent, in order to pay off their debt, whatever it may be, you need to say, I'm trading because I know what the market is going to do and I know that I can profit from this move from point A to point B. And if you can establish that consistently, it doesn't take long for you to realize that if you would just capture once or twice a week a move from point A to point B, where you see a nice low resistance liquidity run, what that would do for you. Notice I'm not telling you you're going to make 5k each week. I'm not telling you you're going to make 10k each week. I'm telling you that you can find a setup each week. And it's up to you to determine whether or not you are capable already of seeing that setup and doing something with it. I'm not giving you any financial advice. I'm just sharing with you what's possible. And if I would go out there and say you're going to make so much money each week or each month, you will be thinking solely about that number. You would be thinking about that number instead of doing what's right. You might be wondering, what is right then? What is right is what is according to your protocol, what is according to your rules. And if you understand your protocol, your model, and you're able to see it repeat consistently over time, you know what you need to do. And then the logical result of that will be, of course, monetary. And you're going to make so much more money than you could have ever anticipated that you would make. Because at the end of the day, the only thing that's separating you from those large amounts of money each month is simply the capital that's being behind those trades. But then comes the thing. If you know how to find these moves, how to recognize them way in advance, and how to do something with that recognition of those moves, the money will come. And you will attract a lot of wealth because there's so much capital waiting to be utilized. Capital by private investors, by private firms that simply want good traders. And if you are able to show to them, look, this is what I'm able to do every single week or every single month, they will be able to help you scale rapidly. But in order to get to that stage, you need to know your model and you need to be able to simply stick to your model. And you stick to your model by simply cutting off all of the psychological issues that you might experience. And for some of you, even going out there on social media might be a hard thing to do. Or even sitting in chat rooms throughout the day might be a hard thing to do. For me personally, I don't want any distractions when I'm behind the charts. It's just me and the markets. I need to see what time and price are showing to me. Is what occurring what I need to see occur right now? I don't care what anyone else thinks. I don't care what this guy over here is saying. I don't care what that girl over there is saying. I know what has to occur. I don't absolutely give an F about their opinion. The only reason why I would even consider looking at a chat room or looking at a discussion forum is simply because I want to see what the sentiment is like. Are the majority of people bullish or are they bearish? I know that I should do the opposite of that already. And if my technical analysis is signaling to me that, for example, the market is going to be repriced higher and the majority of people are bearish, across social media, for example, I have another confluence to my trade idea. And do you think I get upset about their opinion? Do you think I get worried about the fact that the majority of people are anticipating lower prices whilst I'm seeing higher prices? No. Because I know that the masters are wrong and I'm comfortable with going out there and saying, I'm anticipating this. You might be saying that this is going to happen. I'm anticipating that this is going to happen. And it's a character trait that you will have to develop if you want to succeed in this business. Because if the markets are dropping into your point of interest, you can't be fearful of them continuing lower. You need to be excited at that moment. And not excited in a sense of, oh, you're going to impulsively buy, for example. No, you need to be excited because you know that an opportunity might present itself soon. So the process of looking for the signs to confirm a smart money reversal occurring begins. And you begin to look for those signs. You begin to look for your SMT. You begin to look for time alignment. You begin to look for CSD. And when all those things align right there and they occur after one another, you know that a reversal is in. And do you think that you should then worry about what all of those other people said, that they were anticipating lower prices? No. Because you know that the masters are wrong. You are the one that will be able to hunt their stops. You know where they place their stop losses. You know where that buy side liquidity is resting. And you know that the market will seek to reprice towards that buy side liquidity, because that's what is occurring every single day. And if you get to that level of confidence, people around you will think that you have a big ego. They will think, oh, there's that guy again, and he's saying this and that, whatever. Who cares what other people think about you? If you're able to go out there and consistently profit from those moves where the masters anticipated something and you did the completely opposite, do you think it matters what people think of you? You start making 10k a month, you start making 100k a month, you start making multiple 100k's a month, you start making millions a month. Do you think it matters to you what those people say about you? The answer is quite frankly, absolutely no. Because at the end of the day, the opinions of others don't influence your bank account. The only thing that can influence your bank account is your trading results. And your trading results are a result of you consistently doing the right thing. And if you understand everything that I discussed so far, when it comes to the psychological aspect of trading, you will be able to get to that level where it's simply a matter of, okay, I see my setup, I trade it. I know where I'm reaching towards, I know what my drawing liquidity is, and when it gets reached, I walk away. I don't care if the market continues to expand, I know what my target is. And when the target gets reached, I walk away. And something else that is very important then to understand is the fact that if you have established what your idea is, what your trade setup is, you will take the setup, on a demo account of course, I'm not giving you any financial advice, but you take the setup and you simply be content with that movement of what you anticipated to occur. If the market continues to expand beyond your drawing liquidity, who cares? At the end of the day, what matters is that you're able to consistently see those setups. That's what matters. The next topic that I then want to discuss is the following, and that's the topic of overtrading. Because if you become very good at this, you'll be able to find those moves a lot. You will be able to go out there and say, okay, I see a setup here, I see a setup there, I see a setup there, I see a setup there. I can trade all of them. You can dance all over these markets because every single move can be anticipated, because that's how rigged this world is. However, when you get to that level, the thing that you need to do is you need to limit yourself. Meaning you need to be content with enough, and it completely falls in line with what I just described of saying, okay, you have your setup, you take the setup and you are content, you walk away. If you would go out there and try to catch every single turning point, you will not only get burned out, you will also take unrequired risk and losses. If you would simply say, I'm going to take one trade per session, because you know that every single session there is this one trade that can be highly probable if the environment is highly probable, if your model tells you that it's likely to be a tradable environment. If you see that one setup and the setup takes place and you capture that move, that right there is phenomenal. If you're able to do that every single week consistently, you will be better than everyone out there. Because the majority of people do not have that self-control. The majority of people try to do more than what is required, which leads them to take unrequired risk, which leads them to taking those unnecessary losses, which leads them to experience those negative feelings, which automatically causes them to perform worse. If you are able to recognize that cycle occurring in others, what you need to do is say, okay, if I know that the majority of people make that mistake and they fall into that cycle, I need to stop after I have made money, and I need to be content with that. I need to be able to walk away and enjoy life outside of the charts. You do not want to be trading simply because you want to be trading every single day. You want to be trading to support your lifestyle, to support the way that you want to live. And that's why having hobbies outside of the markets is so important. I feel like the majority of people nowadays get into trading and they think, okay, I see my setups, I know what my model is like, I know ICT concepts, I know that it's all rigged, I know algorithmic precision, I know time and price, and I simply want to go out there and trade every single turning point. It's possible, don't get me wrong. However, you need to ask yourself if that is the reason why you're trading. For me personally, that is not the reason why I'm trading. I'm trading because I want to support my lifestyle. I'm trading because I want to take good money from the markets. What's your why? If you do not understand your why, if you do not understand why you're even in front of the charts, you're already going down the wrong path. Because a person that doesn't have a clear why, that doesn't know why they're even trying to become this disciplined version of themselves, why they're even trying to become this good trader, has no real mental strength behind him. So you need to be able to say, okay, I'm working this hard to get to control myself because this and that. And if you're able to fill in everything besides because, you will get to that level of self-control that you desire. So the final topic of this lecture is going to be about journaling. And the reason why I'm so keen on journaling is due to the following. Once you understand what you're looking for in the markets, you need to be able to control yourself. You need to understand what makes you tick, what type of things can occur outside of trading that will influence your behavior behind the charts. The majority of people will get in front of the charts when they just had an argument, for example, with their spouse, or they got fired from their job, or they had a tough day at school, whatever. Whenever you get in front of the charts, when that has occurred, what do you anticipate the result of your trading day is likely to be? It's going to be bad, of course. It doesn't take a genius to realize that. And the reason why that's the case is because you're going into the charts with a negative mindset. A mindset in which you're already primed to do the wrong thing. You're primed to not follow your model. So you need to become hyper aware of your thoughts. You need to become hyper aware of everything that's occurring around you. And in order to journal, I have 3 main things that I want you to focus on. First of all, I want you to focus on your pre-market routine. I want you to take some time to write down in, let's say, a Notion page or a document or a physical journal, what you have experienced so far that day. If you are in a chilled state of mind because you had some fun things that you did, or you are actually in a negative state of mind because you had an argument with someone, or you just had a bad day at work, whatever. You need to journal that right there. Because if you are able to journal your thoughts before you even open up the charts, you are able to already realize whether or not what you're about to do is going to be the right thing or not. If you're worried about something, if you're angry about something, if you're fearful about something, if you're emotionally attached to something, if you're crying about something, you do not have any permission to even open up the charts, and you need to limit yourself right there. You need to say, I'm going to wait until my personal life has cleared up and until me as the operator is back into the proper state of mind. And when you're able to get back into the proper state of mind, you are allowed to proceed to the next step. And the next step is opening up the charts and going through your technical analysis, looking at the markets and seeing whether or not there's something to trade. Then, whilst you're in front of the charts, what's very important to do is that you're able to log your thoughts whilst you're in front of the screens. Meaning that you're going to journal, okay, I'm anticipating this and this and this to occur on the Nasdaq. I see, for example, that we're currently in a buy program. I see a market make a buy model setting up. We're currently delivering lower. I anticipate the market to draw towards this point of interest where a low will form a smart money reversal, and I anticipate the buy program to follow after that. That's what I'm going to look for. That's what I'm going to hunt for. You're going to write that down. And if you write that down, you would be absolutely stupid to do something that's completely the opposite of what you expected. Unless the market tells you that it's not going to deliver that way. But if it's not going to deliver that way, you should even question whether or not that opposing delivery program is even deemed high probable. And the answer is usually no. But let's say that you have established, okay, I'm looking for that market maker buy model to occur. I'm looking for those higher prices to get delivered soon. When you know that and you see your breaker setup, you see that low risk buy, or you see that first stage of accumulation or your reaccumulation phase, all there is left to do is enter on the retracement leg. And if you know that you only need to enter on the retracement leg, you know your invalidation level, it's simply up to the market to deliver, to show to you whether or not your idea was right or wrong. And if you're able to see that in advance, and if you're able to simply say, okay, I anticipated this and this to occur, I entered based on that, and this was my invalidation. And if the market reaches your invalidation level, you journal that and you say, okay, I was anticipating something to occur, but the market did not deliver, and therefore I got out. And that's a good thing. It's good that you got out, because the market showed to you that it was not going to deliver according to your expectation. And that right there is a skill that you will be able to develop, because you will never write something down in your journal that's negative in any shape or form. If you journal negatively, you're going to prime yourself with a negative mindset. And then the thing that's going to influence you is not going to be something that comes from the outside. Because at the end of the day, it's all about what is going on inside of your head. And if you're feeding your mind with negative thoughts, why are you surprised that you're not performing to the highest possible degree of precision? If you're not able to control your thoughts, you will not be able to control yourself behind the charts, and you will not be able to take the best trades possible. So you need to get to know how you can control yourself. So when you have journaled everything from pre-market to during market, and now comes to post-market journaling. Post-market journaling is simply the following. What you're going to do is you're going to first of all journal what you were expecting and how the market eventually delivered. If you have journaled those two things, the next thing that you need to do is the following. You need to journal how you basically executed based on that expectation, if the market followed your expectation, and if the trade that you took was profitable or not. If it was profitable, you not say it was a win and walk away. No, you say it was a win because so and so and so, which led me to believe that higher prices were next in that market maker buy model example. However, let's say that you were wrong. Let's say that you took a loss and the market did not deliver according to your expectation, even though it showed signs of delivering according to your expectation because there was an entry for you. If that is the case, right there, what you do is you say, okay, I was expecting that the market was going to run higher, that it was going to draw towards that original consolidation, draw towards that buy side liquidity. However, it did not do so. Instead, it failed to do so. When you see that occur and your invalidation level gets reached, you need to cut the position. And when you cut the position, it's not a bad thing. It's a good thing because you are protecting your equity. The market should have never reached your invalidation level if it is placed at a proper level, if it was going to deliver according to your expectation. So when the market doesn't deliver that way, what you need to do is walk away. And you need to remove yourself from risk. And that loss that you take is simply you paying for more market data. It's simply you paying for more market intel. Because now you know that the market isn't likely to reach towards that original consolidation above current market price that you thought the market would reach. And when you know that, that's data for the next time cycle of interest, for the next session of interest. Because then you can say, well, if the market didn't deliver higher during the previous session, and the market instead begins to displace lower, maybe it's not even going to draw towards that buy side liquidity anymore until a later point in time. So what we've discussed so far is a variety of things that one might experience when they get into live trading. It might be, for example, the overtrading part that might be killing you. It might be, for example, the impulsiveness that you're dealing with. It might be the fear that you're dealing with. It might be the greed that you're dealing with. If all these things are controlled, and you know how to handle yourself, the only thing that there's left to do is simply remain consistent. Meaning, stick to the rules that allowed you to get to that stage of self-control. Because once you're able to control yourself fully, and once you're able to simply say, okay, this and this and this is what I'm anticipating, and this is how I'm going to execute based on that, and this is how I'm going to basically take proper risk with proper risk management, all you need to do is keep on doing that. And it is not fancy. I know you might be thinking, oh, he was going to tell me the secret sauce. He was going to tell me something that would completely change my life overnight. No, because it doesn't work that way. Profitable trading is very fucking easy. All you need to do is you need to know your model, you need to know when it's likely to deliver, when it's likely not to deliver, and you need to recognize move from point A to point B, and once you're able to recognize that move, all that there's left to do is basically trade based on that move. And if you're able to do that, what's stopping you? Nothing. Absolutely nothing. Simple as that. And if the market doesn't deliver to your expectations, you walk away. I know it sounds so simple. However, to then apply that is going to be challenging at first, because you're going to overcomplicate it. You're going to look for things that don't matter. You're going to listen to others. You're going to listen to the opinions of others. And based on that, you will automatically make your trading overcomplicated. And that is something we need to avoid doing. And we avoid that by having those clear rules of engagement, clear rules of disengagement, rules of when we're looking for things, rules of when we're not looking for things. And when we have defined all of those rules, all we need to do is consistently execute based on them. All right, with that, this lecture comes to an end. During this lecture, we've discussed a variety of psychological issues that one might experience when they start becoming good traders. I want you to understand that whatever you may be going through right now is going to end one day, and you will be able to control yourself more. And because you're able to recognize that this is all part of the journey, you will get to that stage. But only if you are willing to put in the required change. We have discussed the topics such as overtrading, we have discussed fears, we have discussed greed, we have discussed, for example, the desire to go out there and prove yourself, and all these things can be combated if you start to recognize those patterns in your own performance. Because you need to accept that how you're performing right now is likely going to be influenced by those things. And if you understand that right there, it's up to you to start putting systems in place to control yourself more and to simply detach yourself psychologically from everything that's going on in your personal life and simply focus on the charts. What is the market telling you? And have limitations for how much you are allowed to risk, how many times you're allowed to trade, when you're allowed to trade. All of those things have to be defined within your model. And until you have defined those things, you simply have a technical edge, but you do not have an edge that goes beyond the charts. And in those edge that goes beyond the charts, that you will eventually reach the success that you desire. So what I want you to take away from this lecture is the following. I want you to understand that if you become aware of these things through effective journaling, by simply saying, okay, this and this and this is influencing me right now and it's causing me to behave this way, you need to be able to filter out those experiences. You need to be able to say, okay, it happened and now I'm going to walk away. It taught me something. I know that this occurred, so now I know how to try and avoid it in the future. If you know that right there, all you need to do is say, okay, I know that this occurred in the past. This experience caused me to behave badly. The next time when this experience occurs, I'm not going to go out there and risk anything. Because if you will go out there and risk something, you are going to make mistakes. And those mistakes will be noticeable by you. And you will beat yourself up because you knew that you experienced this in the past. So why would you even go out there and try to get a different outcome when this situation presents itself again? I hope that you found this lecture insightful. If you did, please share it with me on the mentorship forum. I'm very curious to hear your thoughts about this format. It's not something I want to do often. However, if there's a good feedback and if you guys really like this format in which I'm simply talking to you, then I would consider maybe doing it more often when it comes to topics such as psychology, mindset, whatever. Maybe even some technical things here and there, and we will see from that. Please let me know. I look forward to speaking with you next week for lecture 14 of the model series already. We're closing the end. I have 2 more lectures planned, and after those lectures have been released, we're going to move on to the next series in which I'm going to showcase the live application from beginning to end. Meaning from the moment I open up my charts, I will share with you everything that I'm seeing. I will share with you whether or not there's a setup, whether or not the environment is highly probable, whether or not I even see something in the first place. And based on that, you'll be able to really read my mind. And as a result of that, I think you're going to experience many light bulb moments. So I look forward to beginning that series soon. I want to thank you for watching this lecture all the way to the end. And I hope that it inspired you to begin putting systems in place to get to control yourself more. Be safe.